Hello traders and investors, I'm L.A. Little and this is your daily NeoTA wrap. We take a look at these markets and we're doing it from a neoclassical perspective. That means we're looking at volume and supply on the charts at significant price points. That allows us to tell where the market wants to go next. That's how we make our reads. If you like what I do and you want to subscribe, just reach up in the right hand corner and do so. Anytime I push content, you'll get a notification as far as what happened today in the market. So let's take a look at that. So we had a push up in the overall markets. We had it in Europe. You can see here with the DAX, the CACs, also in the Swiss market. And if you move over to the US markets, the Russell, nice big pop to the top side, and then 0.5%. S&P just gains a 0.25% by the end of the day. But again, another positive day, and we've seen plenty of those over time. Let's look at the equities themselves. Here's the S&P 500. Gets over the high, stays over the high. Yeah, there's no volume, but it's summer, folks. It doesn't really matter if there's volume or not. What matters is where price goes right now, and price continues to move to the top side. If we look at the NASDAQ, on the NASDAQ, it definitely is a break to the top side, continues on there. Moving over to the NDX, you got the same situation, another breakout, push, and just continues on. And if we go to the Russell, you have the same thing there. So I don't know that there's anything bad to say about what these markets are doing. And matter of fact, if you're bullish, you don't want anything bad to say. You just want it to keep moving up. Right now, you're making little nested ABCD structures inside of larger ones. And so we've got another one here on the Russell now. It's going to try to push up and meet that latest projection, but that's all inside on the weekly chart. It's inside of a weekly ABCD structure that exists. If you want to take a look at that, we can see what that looks like. And here's that weekly chart. And if we do the ABCD structure here, you can see on the weekly, you got the nice big push up, right? Then you get the push back down, and now you have that extension that is up to much higher price points. So on the daily, you're trying to just read the next ABCD structure. Eventually, the target is up here somewhere. If you just do the projections, you can get the exact numbers. I've given that to members already. But it's up in that area, and it's going to try to get up there. That's what it's been doing. That's what it continues to do, and that's what all of these are doing. The first target next is the S&P 500. I've talked about that before. We can go back and look at that one more time before we change the page here. The S&P 500 has been trying to claw up to that 2195 area. You got the 9381 today. I expect it's going to finally hit it tomorrow, and that's what it's been trying to do off this ABCD structure from the lows back in June. So you had the A point here, the B point, back down to the C point, and it's been trying to push to this area ever since. It's taken a long time to get there, but it's going to get there, and it's almost there now. So that's the indexes here in the U.S. If we look overseas, it doesn't look any worse. Matter of fact, it looks good. What you're seeing both in Asia and in Europe is a continued push there as well. Now, they're trailing us, they being the other indexes on the world markets, are trailing us in that they're not as strong, but they continue to push higher. If we look here on the DAX, for example, you got a nice big push, an ABCD structure here, and that one I think is almost done. 93 up to, let's get the price points, 93 up to 1016. So that's 700 to 860. If we add that onto this, the 60 gets us almost to 10, so it'd be almost 10.8. We got as high as 10.802 today, so we actually finished it off today. And look at that hanging man reversal today. Now, I had not noticed this until now, so that's actually a bearish feature that's showed up here on the charts. And what I'm talking about is this little hanging man that you see today. So you essentially think about what happened here on your candle. You push up, right? You push it to new highs. You finish off your ABCD structure that was in effect, right, from this bottom. So you push up. Here's your A point. There's your B point. That's the target, right? Pushes up, hits that target today, right there. And then what does it do? The sellers take over. The buyers walk away. Prices reverse, and you get a little candle at the bottom. That says the day was won by the sellers, not the buyers today. And it happens at a price point where you would expect the reversal. This is a rather significant feature that says we should try to trade lower. If this market's really stronger than we think it is, which has been the case now for a good 2 months, if that's still the case, this is going to be ignored. They're going to push it up. The expectation here, and that's the test, is that this thing should come back in. And if it does that, then this market is telling you it's going to try and pull back. Let's look at the Swiss market because I like the signals on the Swiss market better. Let me see what it looks like in comparison to the DAX. Now the Swiss just broke over swing point highs, and it looks like it's got a test today, 83.1088, and it got to this one failed on the test. Wow, so that's 2 now. So look at the test here. So you have a swing point high. You see the H here? You got a swing point high right there. It goes up, it tests into that high, gets 5 points over it, closes back underneath it. I don't have the volumes on this one yet, but when it closes back underneath it, if the volume here is lighter than the volume you had over there, which was very light volume, right, then that's a failed test. Now my guess is, even though the volumes are very light back here, my guess is that volume there was larger than you see back here. That means this thing will try and test again tomorrow. And so tomorrow we're going to see really whether or not these markets are done in Europe. And that's going to be a big deal if in fact they're done, because that should put pressure back on the US markets. Let me see what the CACs did. Let's see if that one gives us a clue. So here on the French market, also a hanging man. You got the same case and you didn't get to your swing point high. 45.36, 45.28. Volume's light. That also looks like a failed. It didn't actually fail a test, but it actually failed to stay higher. Europe looks like it wants to pull back. Now, if Europe pulls back, that's going to put a little pressure on the U.S. markets. So that's going to be a curious development. I would have my eye on Europe tomorrow. Let's take a quick look at the Asian markets. So we'll start here with the, let's see what we got. Let's start with the Hong Kong market and see what that one looks like. And that one just pushes higher and it's got decent volume. If I flip over to Shanghai, Shanghai gets a huge boost today, right? Breaks over 2 swing point highs, and let's see what the weekly looks on Shanghai. Also over the highs. This is a breakout on multiple time frames. Now this is interesting. So what you have is you have Europe pulling back, you have Asia pushing forward. Now that so far has been tied to what the dollar does. So let's go over and take a look at the dollar. So if we pull over to the dollar, see what the dollar looks like. Now the dollar is an inside day on low volume, so that doesn't really tell us anything. Let's see if we can gather some information though from the euro, since we saw the European markets begin to fail. And yes, the euro test over and fails on yesterday. That's an over-under. So that's probably going to try to pull back. That's actually interesting because that should help, not hurt, the European market. So maybe that's a false signal. I don't know. So we don't have exactly congruence yet. In other words, we don't have all the signals lining up together. But Asia looks strong. Europe looks a little bit weaker now. Test failures. Tomorrow will be a key day for them. The dollar did hold again. Wants to push higher. Should push the euro lower. Also push the Asian currencies lower. That is usually bad for China, though, because China is pegged to the dollar. And so when the dollar goes up, the Chinese dollar, the yuan goes up as well. That makes it more difficult for them in terms of their markets. But we saw the big breakout in China. So the question is there something else going on in China? Now, I know they had some bad numbers come out, but it looks like the Chinese are expecting, and maybe that's what we saw today, more easing from the Chinese central bank, which is going to reduce the Chinese exchange rates in an attempt to gear their markets higher again. So I guess we'll have to wait and see how it falls out tomorrow, but that's the picture. Now that makes me believe, and especially since the S&P is only a point away from its target, that we're probably going to see our market try to inch up there, touch that target on the S&P, and then fall back. That is the way it looks. I do have one request from a member or a visitor. I believe it was a member actually. Let me take that request right quick. Okay, the last one was ALK. This was Alaska Air. The question was, this thing's trying to break some swing point highs. Is it look like it's going to break intermediate and short-term time frame? So let's look at it. So the swing point highs are up here. You actually have 3 of them, right? Which is a good thing if you break them. If you get over those highs, then you've got something, right? But you got to get over them, and we haven't gotten over them. Actually, we got a nice little breakdown bar here before we got low volume all the way across as we consolidate. So we're not close enough yet to actually get over it on the daily. That price point 68.65 it looks like. Now let's move it to the weekly, see what that looks like. And so on the weekly here, what they're trying to do is do the same sort of thing, and that is they want to get over, they being the market, wants to get over this swing point high. That's almost the same price point. That price point looks like about 68. So somewhere between 68 69 you got to get over. So far it hasn't been able to do it. Then we should move to our monthly chart though and just round this out and see what it looks like. And what I see here on the monthly chart is a little bit concerning. And that is that when I look at the monthly chart and I look at these high volume bars and then I go correlate them with what's up above, that high volume bar are these 3 bars. And so what does that mean? That means that when we came off this top, right? So let's actually draw this with some different mechanisms here so you can see exactly what I'm talking about. So price goes up. Just think about it this way. Price goes up, right? You get up to the highs, right? And when you get up there, let me move this out of the way slightly so we can see. When you get up to those highs, what do? Well, you set a high right there, swing point high. And then you reverse, right? Remember we were talking about the hanging man earlier? That's a hanging man there. And you see what happens? It comes off, right? As soon as it comes off, volume expands. Okay, that's normal. That kind of happens. But then what happens? What usually happens? Price goes right back up. And it goes back up and it tries to test in to that hanging man. But what happens after it does that? As soon as it does that, as soon as it tests into that hanging man, it comes off, and what happens? Volume escalates big time. Okay? That tells you from a supply-demand equation that the buyers have ran out of gas at the top, right? They're not there. They're not willing to pay at higher and higher price. Well, if they're not willing to pay at a higher and higher price, if there's any kind of supply at that level, then they're going to push it back the other way. Now, it's always the test that's important. So in other words, we go up, right? We make a little hanging man high and we come down. That's okay. But when you go back to test and you fail and volume escalates, that's a bad signal, because that's telling you this is not me and you trading, folks. This is big institutions. The institutions have decided to take their profits. That means this thing at best is going to go sideways. And the fact that it came down and tested this low on a lot more volume tells me it's going to come do it again. You're probably going to break it. You're going to head back to the next one. This is not something to buy. That's it for tonight. Have yourself a great one. Thanks for joining me. Until next time, I'm LA. This is and was your daily NeoTA wrap. Have a great night, and I'll see you tomorrow. Good night, folks.